Today's guest is a supporting sponsor of Liberty in Finance. Welcome back to Liberty in Finance. We're delighted to have a returning guest today. Dan Barnholden, the CEO of LUCA Mining, is here with us again on Liberty in Finance. We are live at the Rural Symposium on Natural Resource Investing in Boca Raton, Florida. We've been talking to you for weeks, if not months, about that. And we're here together with Dan to talk to you about some exciting progress that they've just made at their drill program. Dan, thanks for coming back on Liberty in Finance.
Thanks for having me. Thrilled to be here.
The first time we had you on was just within the last month, and you explained to our viewers and subscribers for the first time about a intentional refocusing of the company from just polymetallic, which has been a great baseline of operations and a steady revenue stream and expected to increase, to a gold-focused company. And that's exciting to our listeners and viewers. And you told us last time to expect that you're embarking on a drill program to try to expand the definition of the gold resource that you have at one of your premier mining resources. And you've got some new results to talk about. Can you share that with us?
Yeah, so we were actually really focused on this Rick Rule event. Obviously, there's a lot of great investors here, a lot of great companies, a lot of great opportunities to catch up with friends like yourself, a new friend. And one of the things that we were focused on was trying to get news out on this increasing focus on gold that we caught up about last time. And so a couple of clarifications. We're not abandoning base metals by any stretch. We've got a baseline as a polymetallic company, but there's an amazing opportunity at Campo Morado to increase the focus. And so, as I mentioned last time I was on your show, one of the things that we're really focused on is drilling into the known higher grade gold zones at Campo Morado. And so the known ore body is 5 discrete deposits, and they get increasingly gold rich as you go north along the series of ore bodies. And so we are drilling for the first time since 2010, I believe, from surface into the higher grade gold zone, which is called La Reforma. And so on Monday morning, we were able to put out the results of the first drill hole. It featured 18 meters of 5.5 grams per ton gold, which is about 3 times higher than the global ore body, and 8% zinc. So really what that was is it was a culmination of a lot of work that had been done on the background by the VPX that we hired last November. And really this increased focus that I've been talking about in gold. And so the next step in this focus is to look at improving the recoveries of gold. I think that we mentioned before, right now the gold only recovers 25 to 30% because, as you'll recall, the mine was really built as a base metals mine. And so not to get too technical about it, but what that means is you, in order to recover the zinc and the copper, you intentionally don't recover as much of the gold. And so what we're starting to work on now and what we are going to be delivering to the market over the course of the upcoming months is studies that look at improving the recoveries of the gold. So not just are we going to improve the grades that we're going to be mining, but also the recoveries. And so just for shorthand, I've talked to the technical people internally that run the mines and that are delivering these studies. And just for shorthand, the goal for us is to double the grades, double the gold grades, and double the gold recoveries.
That's 2 times 2 is 4.
2 times 2 is 4. And so just the baseline, $25 to $30 million in gold revenue expected this year. If we can get this right, 100 to 120 million in 2027 of gold revenue. So that would be a step change in value, a step change in cash flow, a step change in leverage to the gold price for this company that we're looking to deliver over the course of the next, call it 18 months.
This fits exactly with the narrative that Rick Rule always tells us to watch for, which is what he watches for, which is latent value that is yet to be unlocked, that the market has not yet recognized.
Right.
And that's the idea when you're saying, look, we're sharing this information with our viewers and subscribers here, you're sharing it with those who are attending the show, is that folks, if you get on board with LUCA Mining now, you get the benefit of an underlying steady cash flow from sustaining operations in base metals,
right,
and this kicker of what's already starting to prove to be a real thing of potential for expansion of exploration, development, expansion in the gold arena.
That's really been the LUCA story, though, for the last year. And Rick recognized it when he came in last September. It's this opportunity, and that's actually why I came here. Today's actually the 1-year anniversary of my appointment as the CEO of this company.
Congratulations.
And really,
My wedding anniversary too.
a lot of great things happened on July 9th. But really what we have tried to do as a company is to tell people about, the plans, and there's lots of plans, there's lots of levers that we can pull to increase value at this company, and then do them. Right. And so, I mean, that's really at its most basic is tell people what you're going to do and then deliver on your promises. And it's sort of that decreasing risk, and different kinds of investors come in at different stages along the way. The guy who came in at 45 cents in our offering last September, like Rick, believed that we were able to going to deliver some of these things that I was talking about at this time last year. Fast forward 12 months, and we've delivered a lot of those things. And now we're talking about some new things, some more greater value things. And I think that a lot of the risk has been taken off the table. We've got a lot more cash on our balance sheet. Our debt has been reduced a great deal. But now there's some new upsides, right? With this story, I think that your downside is protected by the status quo operations on the base metals side. We expect to generate $30 to $40 million in operating free cash flow this year, right? And that doesn't include any of those improvements on the gold side. Doesn't take into account any of the exploration potential at either of our assets. So your status quo is your current market cap. And those upsides that we're discussing here, the exploration, the gold, those are yet to be reflected in our share price. And I think that on Monday, we just, our stock is up 15% since we put out these results. And I think that that's the first initial stages of the market starting to recognize the potential here that we're talking about.
What happens when you optimize your recovery, your mill operations and everything for recovery of gold? First of all, without getting too technical, if you can give us just a hint of what kind of adjustment is made to make that happen on the engineering side. But secondly, what does that do to impact your recovery of base metals, and how does that affect your current status quo balance sheet?
So the hope and the expectation is that it doesn't negatively impact our base metals recoveries. And it's good that you asked, not too technical an explanation, because I'm not a technical person, not a metallurgist. This is sort of at the outer bounds of my metallurgical understanding. But from what I understand, it's a finer grind. And right now we grind to sort of 15 to 20 microns. We need to reduce that by about half, so 7 to 10 microns, which is very, very, very fine. So one good thing is that we are on grid power. Really, grinding is about power, and it's just about cycle time and how long you leave your ore in the mill. Okay, so that's one. I think the expectation is that we may have to float a pyrite con. And again, not to get too technical, but when you are looking to liberate your zinc and your copper, you suppress pyrite, and gold tends to be in the pyrites. Okay, so when you're suppressing pyrite, it means that it's going out to the tails. So another opportunity for us is we have been throwing away 70 to 75% of the gold for the last 15 to 18 years over the course of the operation. We believe that there could be close to $1 billion worth of gold in the tails. And so we're going to also be investigating that opportunity, right? So there's a lot of levers, and a big part of the reason why I joined this company is there are so many different catalysts. Some are incremental, and they could be, $2, $3, $4, $5 million in incremental cash flow if we get them right. And some are absolutely, for lack of a better word, revolutionary for the value of the company. Could add $100 million in free cash flow from precious metals.
I wanted to talk to you about the balance sheet in a moment, but first I just couldn't resist this notion of, you already talked about a brownfield site that had been mined for years before, and you're able to now look at it through a new lens and change market conditions with the increased valuation of gold. This is more justified than ever to try to optimize or capitalize on that resource. But then the idea of not exactly recycling, but almost basically mining what was already mined once, mining it again, but that was now it's essentially concentrated gold contents. But
Well, the mining's done, right? And so you're just reprocessing, right? So not only are you running a new process that should be able to liberate more of the gold, but you're not having to go send men underground and mine this stuff. It's just, dig it up from over there, move it over there, and you're never going to, with this process, but it is a refractory ore body, you're never going to get 90, 95, 100% of the gold, because you're not going to, it's not, doesn't make sense from a capital perspective to build a roaster like they have in Nevada, right? So you're going to be limited on your upper bound, but we are fairly confident that using conventional technologies, we should be able to move our recoveries from 25 to 30% where they sit now, 50, 60, maybe even into the 60s. And that's obviously, that's when I talk about double the grade, double the recoveries, that's 4x.
Yeah, and when you were talking about that, you didn't even mention in that same breath not only going after what's still in the ground, but going out what's piled up on the, and so that's another multiplier there.
Right.
At least as long as that pile lasts, and it sounds like it might last a while, and it's already been half milled anyway, so.
Well, it's been milled once, and so you're just reducing the grind size.
My subscribers will forgive me for geeking out about this as an engineer, because I'm a former manufacturing engineer associated with industrial abrasives.
Okay.
Milling and all that is in my backyard. Okay, let's talk about the balance sheet, because that's something else that's extremely exciting. And I noticed a tantalizing blurb on your banner. I've got my banners here, but your banner at your booth says a target of being debt-free by sometime in 2026. You talked to us last time about a big step towards that that's already been made. Can you recap that for those who might have missed our earlier interview, and then where you're going to go next with that?
Sure. So the history of this asset in this company, we acquired it from Trafigura. Trafigura is also our offtake partner, and they own several smelters in Mexico. So they're ensconced in the fabric of this company. We owed them at $1.50 million. When I stepped in, we owed them $18.2 million. Today, we sit owing them less than $8 million and have a clear path to being debt-free over the course of the next 9 months or so. I had talked in the past about wanting to pay off the debt. We could pay off the debt. We were sitting with about $25 million in cash on the balance sheet, which is a massive change from where we sat last year with $1 million. So we've added $25 million to the balance sheet, and we've reduced our debt by $10 million. So big changes, big accomplishments on the balance sheet front over the course of the last 12 months. What we're going to use our cash for, though, with the success of this drill campaign here, I think that money is better spent on getting more aggressive with the drilling at both of our sites. And this is a kind of a market that rewards drill success. Mm-hmm. We saw that with our share price over the course of the last two sessions. Out in Rick's room there, you've got lots of exciting drill companies, or exploration companies that are drilling. And when those companies are successful, for the first time in many years, you're seeing share prices actually go up, right? So we're very excited, as you can tell, about the drilling potential at both of our assets. So we're going to be very aggressive in continuing to push the drill narrative here.
You took that right where I was going to go next, which was the market for natural resource companies. Mm-hmm. This is the fourth year in a row that Rick has invited us to be on the media team here at the Rules Symposium. And frankly, it's been a long slog because there's been such low market sentiment, which Rick loves. He loves when markets are not in the spotlight, because he can get in and make his move before the public does.
Drive better terms, right?
Drive better terms, and also just acquire assets that are exceptional in value. By the time the public makes their move, or even their initial move, as you described, then the value proposition shifts from when the early entrants like Rick tend to get in at the right time. So on that regards, you mentioned this environment now is favoring the leverage of expanding your resource definition through your drill program and so on. Talk to us briefly, if you could, about the market multiplier that's been in place as an operating company, mm-hmm. and what's traditionally expected in this current environment with a rising gold price and making gold discoveries. What you're picturing in terms of the realm of reasonable for a market to reward you?
Sure. Well, obviously, the last 12 months have been a fabulous time to be in the precious metals business, right? And because we are a producer, and look, we're not a low cost producer. We're mid to higher on the cost curve. But what that means is that as the commodity prices have risen, our margins have expanded a great deal, and on a percentage basis, much greater percentage than, say, a lower cost producer. Just for quick math, let's say you produce gold at $1,500, okay, and you're at $2,500, you've got $1,000 margin. You move to $3,300, now you got $1,800 margin. So your margins have gone up by 80%. Now, let's say you're us and you have $2,200 AISC. Your margin at $2,500 is $300. Okay. Now your margins have grown to $1,000. 33 minus 23 from 300 to 1,000, that's 3.5 times. So instead of going up 80%, and you call this a higher leverage company, a higher beta company, and that's why our share price has done so well, because we have captured that beta. Right. So as we think about this market, if you are a believer in the ongoing potential for commodity prices to rise, high beta names like ours will continue to outperform. And I think, look, is it possible we get a pullback and some consolidation? The market has moved pretty far, pretty fast. So I don't think it's out of the question by any stretch, but I think that the longer term trend is definitely upwards.
It's a story that we're going to want to stay connected with going forward, and our viewers and subscribers will benefit from ongoing insight that's gained as you go through your drill program, as the market starts to recognize the potential that you're unlocking there for shareholders. And folks, if you don't want to miss anything about LUCA Mining, look in the description of this video. You'll see a link to their corporate website where you can get more details on everything we've talked about. And also make sure you're on our free mailing list. Just go to libertyandfinance.com, put your email address, subscribe, and make sure that you confirm on the confirming email. You'll get every interview with Dan and LUCA Mining, and you won't miss a thing. Any other tips for prospective investors who are considering, they've heard about you, they know Rick has already validated you, he's done the due diligence, sees you and your team as high productivity and a good bet going forward because he's invested. Any other thoughts for people who are looking at LUCA Mining and want to learn more?
Yeah, I think it's some of the things that I already covered a little bit, which is listen to what we say we're going to do, and then see if we're able to achieve it. I think that we've demonstrated over the course of the last year a pretty good track record of being able to do that. So the things to watch for, obviously, is this ongoing drilling into the higher gold grade areas of the deposits. It's delivering a study on how we might be able to deliver better recoveries, and so that's at Campo Morado. We've also kicked off our first drill campaign at Tawaweto, which is the first time since 2012 that surface drilling has been done at Tawaweto. So there's the thing to remember is that this company, these assets have been starved for capital for so long. There's just so much for us to work on. And so I had a guy come by the booth yesterday, and he said, "What should I be asking, and what should I be asking other companies?" He was a first time attendee here, and I said, "Ask for the catalysts. What are the catalysts? When are they expected? How am I going to know if the catalysts are as expected, better than expected, worse than expected?" But really what I love about our opportunity and our company is that there are so many catalysts. There's so many different things that we're working on, all of which should enhance the value of an investor's.
So if I'm hearing you correctly, these are things that can be game changers, things that can move the needle for you and for investors.
Look, some of the things are going to be incremental, and some of them will be game changers. Right. So, like I said, there's a lot that we're working on. It's that getting debt free. It's those exploration results. It's studies. It's ongoing incremental improvements to our baseline status quo operation. There's a lot of things that an investor will be able to look at and see how things are going.
The next time that we get together, I'd like to circle back to the jurisdiction that you're in,
Sure.
the support you're getting, the skilled labor you're able to obtain from the local, and the support you're getting from the government in terms of permitting and taxation and everything. We've got a lot that for investors to consider. You touched on all those things in our first interview, but I want to just get an update from you next time. But just grateful for this update. It's significant. It's your initial expansion exploration program results, and we're grateful for that. Thanks for coming back on Liberty and Finance.
Thanks for having me.